Hello traders, this is Fawad Razakzala, market analyst for City Index. Today is the 6th of March 2024. So starting with the daily chart of gold, you can see that it's up for the sixth consecutive day. It's approaching the December's record high at 21.46. Judging by how it's broken out and its ability to hold above this key resistance area, or former resistance area I should say, around 2080-ish, this blue shaded area, which is now going to be support. Now, judging by how it's held above that, I think it's just a matter of time before we see a new record high. And so let's zoom into the shorter term charts and look at price action in greater detail. And as you can see on this hourly chart, the metal has broken above its short term bearish trend line as well. So the momentum is clearly bullish and a record high could be on the way, possibly as later on as today. Key support at 21.25 on this hourly time frame is held, so that level remains important to watch should we see a pullback later on. Below that, we have significantly important levels on the daily time frame. As I mentioned, this blue shaded area is key, so even if we do see a short-term pullback, for as long as the support area holds between 2080-ish to 2088, where previously gold had found strong resistance from on multiple occasions, the path of least resistance will remain to the upside. I would only consider bearish setups if and when gold creates a major reversal pattern. So, for example, a false breakout scenario above the December high could be one, but more to the point, if gold were to start trending lower and breaking back below this breakout area and go back below 2024-ish, I'd imagine that would be bearish. But for as long as that doesn't happen, the path of least resistance is to the upside, and we'll concentrate on bullish setups than bearish. Now, with gold approaching its record highs, silver is actually miles away from reaching its own record high that was hit in the year 2011 at 49.76. In fact, silver hasn't even broken out of its recent consolidation pattern, as you can see on this monthly time frame. So potentially there's a prospect of silver catching up with gold and staging a massive breakout if precious metals were to remain on the front foot. And so let's zoom into the daily time frame to look at price action in greater detail. And as you can see on this daily time frame, silver has been creating higher lows ever since bottoming out back in September of 2022. Since then, it has created several higher lows and a couple of higher highs. Let's zoom into the recent price action, and I had highlighted this level 2350-ish as resistance because previously silver had found strong selling pressure around that area, where we also have the 200-day moving average coming in just slightly below that at 2325-ish. So if I put a box around here, is where silver was finding strong resistance until the breakout earlier this week. So now that we've broken out above this area of resistance, this zone is going to be important in terms of support. And for as long as we remain above this area, the path of least resistance on silver is going to be to the upside as well. So from here, silver could stage a potentially large rally, and the next upside target could be 25, a psychologically important level, followed by the high that was hit in December at 25.92. Thereafter, you have the May 2023 high at 26.13, and so on. But the potential is there for silver to really catch up with gold in a significant way. So, missed out the opportunity on gold, perhaps silver is the market to pay close attention to. Looking at the other major commodities like crude oil, well, it's not really rising as sharply as precious metals are at the moment. Crude oil is consolidating its recent gains, holding around the 200-day moving average and support in the shaded blue area. This is the Brent contract, so a move above the 200-day moving average is now needed to trigger fresh momentum buying. Meanwhile, if support breaks down at around 80-ish, that would be a bearish signal for crude oil. Similarly, the WTI contract is consolidating around the 200-day moving average. It is trying to break out of this triangle pattern to the upside. So far, it has failed to do so, but a move above 80 on a daily closing basis would be bullish, I would imagine. With precious metals trying to break higher and other commodities also looking a bit strong, commodity-heavy indices like the FTSE 100, which have underperformed in recent months, could be on the verge of making a comeback. The FTSE 100 here has created a hammer candle on the daily chart on Tuesday, finding support from the shaded blue area. Now today we've seen some upside follow through. However, it hasn't yet broken above this key level of resistance at 76.87, where it has struggled to hold above on multiple occasions despite a few days of trading above it. So that level remains key for me, and if we were to break above it in the next day or so, I think that would be bullish, because for then we'll have broken this bearish trend line as well on the daily time frame, and given the higher lows that have been in place since November, we could be seeing fresh record highs for the FTSE as well. Now for the FTSE, the record high comes in at 80.46, which was the high back in February of last year, and ahead of that stands the December high at 77.69. So there are a couple of further resistance levels to monitor, but if we do get a close above 76.87, I think that could be the bullish signal many bullish traders are awaiting. Meanwhile, Chinese equities have started to push higher, which could support the FTSE, and as you can see on this daily chart of the China A50 index, we have been seeing higher highs and higher lows since the start of this year. At the moment, the index is holding resistance just below its 200-day moving average, which now needs to break to trigger fresh momentum buying. Now, with Chinese government recently announcing a 5% GDP target, we could see more stimulus come in from China, which could drive the underperforming equity markets there and help narrow the gap with the global equity markets. For more analysis and trade ideas, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video.